Welcome back. It's time for Options Corner. I'm now joined by Kevin Green, Senior Markets Correspondent for the Schwab Network, but also the watcher of all things option flows. Kevin Green, perfect time to bring you in as the market kind of rounds that final turn. We got about, 30 minutes to the close. What are you looking at here into the close? Because suddenly it's turned into a pretty nice green day.
Yeah, we are seeing a nice little, bounce action and trying to recover maybe some of the lows that we actually had yesterday and some of those losses here. When you're kind of looking at this, you're seeing a little bit more speculative flows pretty much across the board, especially if you're looking at the mega cap tech names. Those have been the ones that have really caught a lot of attention here over the last, let's say 2 hours, 3 hours or so. And that seems to be the case. And we're also seeing a little bit more of a broadening out. Now, if we look at the morning levels that we actually had highlighted here today, obviously we broke through that 5850-ish area. That was going to be an area of resistance. That was an area of resistance. Now we have that breakout to the upside. The reason why I want to bring up this chart, you can see this kind of bottoming formation, but we are coming up to a pretty key area of resistance, sitting at that 5880-ish area here. And what you'd like to see to the close is really trying to test that and break through to the upside. And then that's where we really start testing those larger candles, that bigger sell-off that we had yesterday. So if we're looking at it from an intraday standpoint, that 5880-ish area is going to be that major area of resistance where you do see some confluence with options positioning, some sold calls there at that level. And that would be an area that I would say that we probably could see maybe a little bit of a failure going into the close. But if we're able to break up, you actually could see maybe another 20 points or something of that nature to the upside here, trying to recapture that 5,900 level, which has been a really key area for us to be able to hold, and that we broke actually yesterday. To the downside, I'm actually looking at 5840 to the downside to be mindful of for this market here. But we've been in a really nice little channel. If we bring up the intraday chart, you can see this really nice channel to the upside here pretty much all day, where we've been able to leverage the lower support area pretty well, seeing some buyers really kind of stepping in, only really violating it once and really catching a little bit of a bid. But now we're kind of breaking up above that. Now, do we go back, retrace, and get back into this this pattern here, or do we actually see a little bit of a breakout? This candle that is actually taking place right now looks like it's trying to engulf the previous candle. Now that's 5-minute chart here, so we'll keep an eye out on that. But it's been in a really nice tight ascending range so far here. It doesn't look like we have any fireworks on the horizon quite yet. We're obviously going to be continuing to keep our eyes out on yields. But if you're looking at the equity flows on options just so far, the speculative tone in this market has definitely still continued for a lot of the mega cap names.
Yeah, it looks like they're trying to build a bit of a base here, Kevin, as I was looking at your chart, obviously starting a bit of an upward descent as well. I think the question, coming into today was what's driving the ship? Is it going to be continue to be a treasury-driven ship, or is the equity market going to grab the wheel again? To be determined, I would say. What's your opinion on that?
I think the treasuries are definitely driving the ship right now. If you look at the 10-year note, it actually is below that 4.55% level that we've been, talking about pretty much for the last couple of weeks here. That has been an area of resistance, kind of a neckline with an inverse head and shoulders pattern that has taken place here. We broke above it earlier, but you have seen some buyers actually step in. What I find very funny, Alex, when you see this type of price action for the 10-year as well as the 30-year treasury, you see pretty much midday, you started seeing some buyers really stepping in. And that was actually after the 10-year tips auction, which once again, something that no one really follows, but we did see that as actually a pretty healthy auction today. Those are treasury, protected, inflationary protection, securities, if you will, that are tied to yields on a 10-year basis. So that actually came in really good when it came to that auction, and that's where we started seeing some buyers actually stepping in. That also coincides with this shift in the market as well, starting to really gain some traction, some steam, with volume actually complementing that. So I think this is still definitely going to be a yield story here until it's not. I think this over time, probably the next week or 2 weeks, we'll continue to talk about it unless something really blows out. If we start seeing a stabilization in yields, Alex, I think you're going to see a stabilization when it comes to volatility. That's usually the case. It doesn't really matter where the yield is going to land as far as the level itself. It's the low volatility and the predictability of that yield is what we can actually digest as traders and then continue to reevaluate the market and continue to move forward here. It's the gyration in yields that I think is really causing the the intraday volatility. And you can see that being reflected in the VIX. And you can also see that being reflected in credit default swaps, which is something I watch on a daily basis as well.
Speaking of gyrations as well, Kevin, I know you've been monitoring volume over the last few days, and particularly sort of that advanced volume versus the down volume. Anything on that front you're looking at, or are we looking at anything different on volume today that's caught your attention?
Yeah, so two of them, the chart that we usually got to go to is the composite total volume here on the 3-month daily chart. And that one actually looks pretty decent. We actually had a lot of volume yesterday. Let's see if we're going to complement that today with this reversal. But we had this outsized candle to the downside yesterday when it came to the up-down volume, total composite volume. Up down difference, if you will, 2 standard deviation move that we actually had there. Today we are actually in the positive. So we had a lot of volume yesterday, but if you actually look at it, it did not eclipse what we saw on Monday of last week. So selling pressure definitely to the downside. A lot of that was really kind of concentrated in the mega cap names. That's where we started seeing a lot of pressure in the market here. And today we are seeing a little bit of a recovery. You'd like to see volume actually match or even exceed what we had for yesterday. Right now we're not on track for that, but that would actually give you that confirmation that maybe it was a small little pullback, a pullback in the market. Maybe we can kind of recover. I am still a little bit cautious and a little skeptical of this move, though, Alex, for today. That open gap to the downside for the S&P 500, and I know you mentioned the futures contracts as well. Futures also still has that gap to the upside that was created last week. I think that's still something to be mindful of and something that we probably will test over the next couple of weeks or so. I would actually like us to actually test that and fill it and then kind of come back up right now instead of us lingering up at these levels for so long. But let's see what the market actually has in store for us over the next couple of trading sessions. But a decent recovery day if we're able to hold these levels here. You do not want to see an aggressive sell off to the close here. So.
Kevin Green, we'll catch up with you in about 20 minutes at the closing bell, cover some earnings, but appreciate it as always.